Cool, so I'm here today to talk to you about the NextEnergy Solar Fund. A few key places to start. The time is now to decide how we power our future and to think about the environmental legacy that we leave our children. The time is now to control how we feed our energy supply mix for the future. And also as individuals, the time is now to vote with our feet about how we want ESG outcomes within society. That's why I think the NextEnergy Solar Fund is a super interesting prospect and one that I'm really happy to talk to you about today. I'm the Managing Director of NextEnergy Capital in the UK. The NextEnergy Group is a team of over 200 specialists focused on the solar sector and battery storage sectors. We have 3 pillars within our organisation. The first pillar is the NextEnergy Capital Group. That is an investment manager. It's got more than $3 billion of assets under management. It also is the investment manager for the NextEnergy Solar Fund. The second pillar of our group is a company called Wise Energy. It's the world's largest solar-focused asset manager. What the team at Wise Energy don't know about running solar assets in their various stages of a life is not worth knowing. And the final pillar of our group is called Starlight. It's our development platform. So it dreams up in various different markets the concept around new renewable technology, and it takes them through the development process into realization. So end to end, we are a really well skill-setted team that cover all aspects of a solar asset's life cycle in loads of different jurisdictions across the globe. So a word about NextEnergy Solar Fund. So NextEnergy Solar Fund is listed on the FTSE. It was listed back in 2014. It's being a highest dividend payer of its peers in the sector since its list. It runs about a 7% yield. It's physical asset based. So it's a fund that is designed to focus on core physical assets in the UK and international markets, and then it looks at owning those physical assets and extracting value and income from them over a long period of time. Largest single owner of solar assets in the UK is NextEnergy Solar Fund. And it's got about 865 megawatts of installed capacity with additional growth prospects coming, which I'll talk to you about in the following slides. The important thing from a NextEnergy Solar Fund's perspective is it's a super stable platform. So it's physical asset based, as we've said. It works in the power markets. It works with some government subsidies. So in terms of thinking about that income, we really get how this portfolio is going to generate income for the long term for our investor base. It was slow on transition. So for those of you that went to sleep when I started talking about solar in the UK, let me say a few words about why solar is exciting in the UK. Solar is a super abundant resource. The day that the sun doesn't come up in the morning, the least of your worries is going to be how your investment portfolio is going on. So we know there is a reliable, top-end generating source that comes up every single day. And the UK is actually the perfect place to generate solar. One of the things that's often within people's mind is you need significant amounts of direct sunlight in order to have a good solar investment case. Actually, that doesn't quite work in reality because heat is the enemy of efficient solar generation. So markets like the UK with a stable fluctuating temperature range and significant rainfall that allows us to clean the modules on a day-to-day basis, actually you are able to create a really reliable, predictable outcome from your solar generating assets. Solar as an asset class has really low inter-year volatility, especially when looked at over the long term. So it's super predictable. And over the last decade, what we've seen in the sector is massive increases in efficiency and significant reductions in the cost base. What that means as of today is that solar PV is the logical way to generate new energy. So solar alongside offshore wind is now the cheapest form of energy that is possible to produce. So why think about NESF within the context of your portfolio? 60% of the revenue that's generated by this vehicle comes from long-term either government subsidies or long-term power purchase agreements that we have with industrial off-takers. Both of those things have an inflation linkage. So in this high inflationary environment, you're lent really well in towards protecting your interests through that inflation. It's defensive strategy, so it's physical asset based. you can go and see, know, and love the things that are underpinning the valuation within the portfolio. There's no risk of a unicorn here, right? This is physical, understood assets that are valued in a really well-structured process. Alongside that, a big chunk of the portfolio is UK-based, as I've already said. So when we start to think about the energy security, which has become particularly pertinent in the light of recent events, NESF is a significant contributor to that future energy mix. It's FTSE listed, as I've said already, so it has significant governance throughout it. It's got an independent board that sit within Guernsey that govern all of the outcomes of the fund. So you can be sure as an investor that every decision that's made goes through robust investment processes and that all aspects of the fund's governance is overseen by that third party. Finally, it's a significant green contributor. So we power nearly 300,000 homes with clean, green energy every year. So on top of that financial decision that we've already said is clear from this asset base, you've also got clean ESG metrics as a fund. So it's the right moral choice alongside the right financial choice. A little bit more about the portfolio. So the beauty of solar PV as an asset class is that it's distributed energy. So even when we have a UK-led portfolio, you can see from the top of the graph there that those assets are spread geographically across the UK. What that means is you don't have any local volatility. So if a grid goes down, or a single asset goes down, or a particular weather event happens, your portfolio effect kicks in. So your underlying portfolio is extremely resilient to any of those outcomes. One of the things we've done following investor feedback over the last few years is also bring some international diversification and some other technology set diversification into the fund as well. We've done that in a couple of different ways. We brought an Italian portfolio back in 2017, which is a portfolio of 9 assets, and we continue to look at how we might bring direct international solar assets into the portfolio using that core team that I've already mentioned who really understand how solar works and how to extract maximum value. We also, through the period of last year, invested in a private equity structure, which is also an OECD-focused solar investment play. So that brings instant diversification across multiple other markets in the world. What we're really looking to bring there is energy market diversification and weather diversification into the portfolio. The final thing that we've done over the last year, and this is particularly exciting, is we are a very early mover in utility-scale battery storage. So we're in the process of constructing, at the moment, our first asset, which is 50 megawatt site based in Fife in Scotland. And that is a really important step for both the NextEnergy Solar Fund and the UK market in thinking about how the power ecosystem changes over time. So as you generate more renewable power, as you see more traditional generating sets come off production, you have more volatility in the power price. That is good from a battery's perspective because what it is looking to do is provide stability services into the grid and also to look at buying low and selling high in those power markets. So a super interesting prospect when we start thinking about how we generate more revenue for NESF out into the future. As we've said already, the core of the NESF portfolio is that strong physical asset base. That's important as an investor because we're able to provide year-on-year stable outcomes from the portfolio. As we've said, top of the funnel is solar irradiance, super predictable, super low inter-year volatility. The technology that we run, as we've said already, really well understood, tried and tested, and therefore the team know how to extract maximum value from it year on year. And as you can see from the top right here, we overperform relative to forecasts year on year. And as we are a reliable, super high dividend payer, you can get significant comfort on our ability to continue to pay that dividend out into the future as the fund continues to progress. So over the 7 years since inception, we have paid an increasing dividend in line with RPI. We have a progressive dividend policy, but as we've said, significant upside in the power markets and reliable portfolio gives us that good trend out into the future as we see dividend cover continuing to strengthen and the opportunity to pay increasing dividend out over the long term as well. And with a 7% dividend yield, it's certainly an attractive proposition. Quick word around ESG. So one of the things that we spend a lot of time focusing on as a fund is cutting through the white noise around ESG. It's everywhere at the moment, isn't it? all the greenwashing, all of the commentary around ESG. So what we do is distill down all of the evidence that we have as a fund, and we use third parties to audit the data that we produce, and we produce it in a simple, concise fashion to allow our investors to really understand what the portfolio is doing and how we are contributing to ESG. So clearly, production of green energy is a nice big tick in the E box of ESG. But we move beyond that in the E, and then we move beyond that into the S and the G as well. So we were one of the very early movers in the market to identify that solar farms in the UK present a really unique opportunity to protect and enhance biodiversity for the communities that we operate in. So every single one of our assets is grazed with sheep and has particularly focused for the local ecosystem measures deployed on it that will promote and foster ecosystems and ecosystem services to the local community. That allows farmers to increase the amount of pollination that's happening on surrounding land and reduce the amount of pests that they have on their crops as well, because we're able to work with farmers to generate more predatory species in the local area from an ecosystem perspective that allow better outcomes across their farming land. We move also beyond those clear environmental credentials into the social side. We run every year suites of education visits for school children so that we can educate the next generation around carbon intensity, around biodiversity, and around different ways to produce energy in the mix, so that they have a different understanding, different belief system to our own generation and the way in which we have struggled to make that transition and really think carbon first when we are making investment decisions and also day-to-day life decisions. And the final word is just to sweep back to governance. So the listed nature of this fund means that governance is absolutely robust. We have layers of governance within the fund with multiple external boards that allow us to challenge every single investment case really robustly, and all the way through our external audit process and on into our operational data, you have those strict governance requirements. So to summarize, solar is super exciting in the UK. The NextEnergy Solar Fund is currently trading at a minor premium to NAV. We see that as a really attractive entry point for investors. We're in the process of diversifying our investor base to bring more retail investors on board. We have historically been very institutional investor-led, and therefore that creates a really unique window of opportunity to enter at a super attractive price. Alongside that, we're positioned really strongly for growth. We have a £300 million pipeline at the moment, which covers battery storage, international assets, and some continued growth in the UK solar space as well. You'll have read a lot in the market recently around government support for renewables and for energy security, and as we've touched already, NESF is perfectly positioned to continue to contribute to that energy security picture, alongside continuing to drive that decarbonisation agenda that we've spoken about in the ESG section. The attractive dividend continues to be leading within the space and continues to be attractive in the context of other investments that are out there. And the inflation linkage that I've mentioned already is fundamental to long-term thinking around income plays and blends NESF nicely amongst other income-generating tools within your portfolio. We're an extremely focused team on the asset base that we own, and we continue to think about ways to continue to drive new growth within the fund itself by buying in new assets and continuing to extract value from the existing asset base, and therefore driving NAV and shareholder returns. And finally, NextEnergy is unique amongst its peers. So we have a team that is focused across all aspects of the value chain, from the investment case through day-to-day optimization of the assets on into the way in which we are selling power into the market. Therefore, you can rest assured that the team that you have in front of you is the right team to extract maximum value from your investment over the long term. Thank you for your time today. We are on stand M0, so if you have any questions, my colleagues and I'll be very happy to take them